Hello nieces, hello nephews, it is your Uncle Charles here, and today we got some type of rally today from the S&P 500. It was incredible, guys, and we are about to talk about it. And if anybody's worrying about the option flow for the SPY, I just want to say it's bearish. It's bearish like it always is, and I honestly just don't feel like covering it. Definitely go check out Cheddar Flow, the YouTube channel. Go subscribe to them. That's where I use my options flow, is from them. Great service in my opinion, but definitely go check them out over there. I'm letting y'all know it's bearish right now, but let's focus on the price action. This was Uncle Charles's plan this morning that I wrote in Discord at 7:20 a.m. very early in the morning, before I don't know who's awake at this time, but I try to be up. Anyways, so I wrote here, okay? This was important. According to classic TAs, technical analysis, if a retracement ends to start a new leg higher, or at the very least start a relief rally, it usually happens somewhere between the 50% to the 61.8 retracement level. I'm sure you guys have heard of this before. And I put that yesterday SPY retraced to the 50% retracement level and bounced. That was the 436.5-ish level, okay? So I had a bull case scenario and a bear case scenario. We want to be nimble and ready for anything. Bull case. Now that the 50% retracement level has been tested, all right, if anybody's wondering what I mean 50% retracement, that is the Fibonacci level that I had starting from, what was that? The February low to the March high. Okay, I might have to recheck that. But anyways, so now that SPY tested the 50% retracement, SPY needs to clear the 50 DMA, daily moving average, at 441.4-ish. When it opened at market, it went down to 441.10-ish, okay? But at the time, it was at that level, all right? So if we clear the 50 DMA, that puts 442.5 in play, then 444.5 in play. I would be bullish if that clears, and we should get a squeeze to the 200-day moving average. So anyways, two of my price targets were hit, okay? But we did have a bear case scenario. Failure to clear or stay above the 50 DMA is bearish, putting 438 to 439 back in play. And if that level fails, I favor we break past the 50% retracement level at 436.5 and drop to 434 level with 430.4 below. That's a 61.8 retracement level. So we didn't have to deal with the bear case scenario today. We dealt with the bull case scenario, okay? So here it is. This is the 15-minute chart, okay? All my support and resistance levels are based on the daily chart, much more powerful. But I like to use the 15-minute chart. This is the 5-minute, goodness. I like to use the 15-minute chart to execute my trades, okay? Some of my Discord members, they prefer actually using the 5. Some use the 2. Some use the 30, 1 hour. But, you know, you got to find what works for you. Uncle Charles likes the 15-minute, okay? This is what I recommend. This is what I use. But it might not work for you, okay? So, anyways, so here's this big green candle, this big body candle right there. That's the opening candle for the day, for today, 9:30 a.m. And it opened below, okay? Very tricky open. It opened below the 438.5 to 439 zone, okay? That's the purple lines right there. So since it opened below, that would have been resistant, okay? But check out what happened. Within that 15-minute candle, we had a strong, big body candle bust right through that resistant level. Okay, so when you see a big body candle like that, that represents strong buying pressure. When you see strong buying pressure at a resistant level, it's gonna break through. Okay, easy to say in hindsight, right, guys? Anyways. So we broke through it, and we got the close. And that's when I let my group know right here, 10 a.m., 439.5 support zone, back testing now. Both need a strong bounce from here to avoid a false breakout. Remember, the strategy is to always buy calls or go long at support. And when we break through a resistance, we want to watch for that back test. We want to watch for that back test to see if it confirms, okay? Because if it's a resistance, we break through it. Back test as a support, okay? So if we back test as a support and then you buy a call on this back test, you entered it as a support, therefore following the strategy, okay? So you got the back test. As you can see, it held, got a little nice wash below it, but it did not close, okay? Where it closes most important, okay? Didn't lose the level that we cleared. Next candle right here, continue to push right up. Okay, push right up. Boom. Convincingly, it closed above 439. Next candle treated for that zone again as a support zone. Okay, support zone. That's where you look to enter. And then we started testing. I got this yellow resistance line based on this yellow triangle right here. Okay, starting from the pre-market, and then we got this little, pullback here early in the morning. And sure enough, we broke right through it. Okay, we never lost support. We never lost the 438.5 level. Therefore, we were not looking for any puts or any bearish positions, okay? So if you bought there, boom, level to level. So I got this white line right here. Is that white? Let me change it to pink, okay? That pink line, that's at 441.10. That was around the 50-day moving average, okay? So level to level, boom, came right to our 50-day moving average. Busted right through. It wasn't a big candle, but it broke through. And what do you do when a resistance gets taken out? You wait for the back test as a support. As you can see, got a little tricky. It got noisy. All right. So we closed above the 50-day moving average. This candle right here closed below the 50-day moving average. But what happens when we recaptured it? Because this candle recaptured it. What happens? That means we are in false breakdown scenario. Okay, that's bullish. False breakdown scenario, bullish. Lose support, recaptured it, and continue onwards up to my 442.5 resistance level price target. And we based around. I let the group know in Discord we was basing around. Okay, best time to get bearish. I know when it's moving up like that and it's hitting resistance level, we start thinking, oh, it's got to pull back or something, right? But you got to follow the price action, okay? Sounds simple, but challenging, right? It is hard to do, but it's not impossible. That's the main thing and most important thing we got to remember. But anyways, we started basing around, never lost the 50-day moving average, and eventually broke right out of that 442.5. You see on this candle right here, treated that level as a support. And then boom, continue to move up. And it came 40 cents shy of my 444.5 price target. Okay, that sucks, but it's not a bad day. Okay, the levels did their job. The price action trading concepts, the back testing concepts, they did their job. Okay, so it's on us as traders to trust in the price action. Okay, if you don't trust yourself, that's fine. You don't have to be a robot and shut off your emotions. You just got to turn it down a little bit. You can still be a human being, right? You just can't trade based on your emotions. You got to trade based on your strategy. Like I said, sounds simple, but takes years to master. And if you're willing to put in that time, I'm telling you, your life is going to change for the better. Now, let me move all these. Here's a daily chart. Okay, nice and clean. All right, so I was talking about that 50% retracement level. All right, we starting here from the February low. Okay, from that swing low, February low, to this swing high, March 29th, high right there. Okay, so you can see this candle right here. I had this line right here. That's the 50% retracement level. All right, right up around 436.5-ish. Okay. And it tested that level closely, but I gave it a zone. Remember, 436.5 to 437 zone. The reason why I give it a zone is because the levels are never perfect, even with Fibonacci. All right, so you got to give it a margin of error, which I gave it, 437 to 436.5 came into the zone. All right, so that for me counts that we tested the 50% retracement level. As I mentioned this morning to my Discord members, usually if we're gonna get some type of rally or we're gonna finish a correction, it's usually at the 50% retracement level to the 61.8 retracement zone. Okay, so we got that bounce off the 50% retracement level. As of right now, we got a bullish engulfing candle, 44.2.5. Okay. We cleared that. That's the 38.2 retracement level, okay? So we're seeing some bullish momentum building here, all right? Which is a good sign if you're a bull, all right? So that's how I trade, guys. We follow the price action, okay? I might be bearish yesterday, But today, Uncle Charles was bullish. And I might be bullish today. Tomorrow, depending on the price action, I might be bearish again. Or I might continue to be bullish, okay? Whatever the price action goes, that's where Uncle Charles goes. I follow, all right? But as far as tomorrow goes, now that we recaptured the 442.5 level, okay? That's bullish, okay? False breakdown mode, all right? So that level must continue to hold for tomorrow, all right? If we back tested it as a support, because we cleared it today, if we back test it as a support, it must hold. If we break back down, that's a false recapture, all right? That's going to put 438.5 back in play to the 439 zone. And then my 50% retracement level. But if it tests that again, I don't think it's going to hold, right? The reason is it's already been tested. And it's most likely, because if we're in the downtrend, we're going to see a lower low, right? So I think we could go down to 434 level and possibly even the 61.8 retracement level. If 442.5 fails, that puts the 50-day moving average back in play, all right? It's currently at 441.16. May change by tomorrow. That fails. Okay, just keep playing it level to level. 438.5, 436.5, 434, 430.3. Okay, and if that fails, very bearish, and I'll favor probably more downside. As a matter of fact, I told you guys I would refine some lows. So here it is. All right, so if the 61.8 retracement level at 430.3 fails, I got a level at 427. All right, that served as a tough resistance and support level in the past. And then if that fails, a critical one off this pink trend line right here. All right, this connects February to March, early March's low. Okay, and we got another support here. If it comes down at 425.5, all right, but remember, don't get ahead of ourselves. Just play it level to level. That is the bearish scenario. All right, we got to lose 442.5 to start some more sell off to the next support level. Okay, but if 442.5 holds, all right, I favor more upside, all right, above 442.5, as mentioned, 444.5, and if 444.5 clears, I think we're going to get a squeeze, all right? I think we're going to get a squeeze to the 200-day moving average, which is currently at 448.3, and possibly go test the 450 level. That's my 23.6 retracement level, all right? Now, around that zone, the 200-day moving average to the 23.6 retracement level, that would be a great opportunity for the bears to step up and push this thing back down, give us a lower high. But if not, and 450 clears, that is very bullish, all right? And that'll put more upside targets in play. But anyways, so yeah, guys, that's what I got for SPY. That's the levels. You know, you play it level to level. You know, it's hard to trade without being biased sometimes because the news. Just remember, the people on the news, you know, they're not really our friends. They may act like they care about us, but they don't really care about us, you know? And those rich whales, Wall Street guys, you know, they know inside stuff way before we do. And they're already making moves. So by the time we hear it, it's probably already too late. You know, we're the little guys. Okay? And as your uncle, I'm just trying to look out for my nieces and nephews. All right? So that's what I got for the SPY. And we take a look here at the VIX. You know, you see this blue trend line looking like it's bear flagging and it's breaking down right now. Okay? So if VIX is bearish, you know, SPY is going to be bullish. But, you know, price action is always subject to change. So VIX, to be bullish, it needs to get back above 22.5 and then get back above 23. That's 23.6 retracement level. And maybe go back and test that 50-day moving average up there at 25.7. Okay? So unless we get a recapture, the VIX is going to be is bearish. Okay? It might back test 23. It might even backtest 24.5. That's off this blue trend line. But unless it holds and gets above, it's not bullish. All right? It's backtest. It might get pushed down with some selling pressure. And the next support is at 20.9. That's the 200-day moving average. If that fails, 18.4 is in play. But as of right now, you see that blue trend line. All right? It's flagging. Bear flagging to be exact. And it's breaking down. Breakdowns of this is bearish. Okay? Triple Q, got a bullish engulfing candle right there. Very nice. Okay. Recaptured this 344.36 level. That's the 50% retracement level that I got. starting from the low of March 14 to the high of March 29. So the next resistance level that I got is up here at 350.85. That's a 38.2 retracement level. Let me see if okay. So we also got the 50-day. Before we can think about 350.85, 50 days at 348.45. That will be a critical resistant level, okay? So it'll be a big win for bulls if we can recapture that 50-day moving average. Okay, then that will put the 38.2 retracement level at 350.85. Guys, when we clear resistance, when we break out resistance, that is bullish. When we break down support, that is bearish. Okay, so if we break these levels, follow the price action. Okay, all right. So breaking resistance. All right, to be bearish though, that 344.36 level must be lost. Okay, if lost, that's a false breakout or false recapture, however you want to call it, and it puts 339 back in play, then 337.86, and then a big juicy drop down to 328. I think I have some levels around around 334, some support 334. Still a nice drop from 337.8 though, and then 328 below 334. Okay, Dow Jones bull flagging. Look at those white lines, beautiful white lines, bull flagging. Okay, still did not break above that 346 level though. So we need to break above 346 and break out this bull flag. Tomorrow will be 347.16. Okay. So it needs to break above 347.16, break out of the bull flag, and it puts 351.69 in play. That will be bullish. Okay. There is some support at the 5-day moving average at 344.9. If that fails, 340.7 is in play. Then down to 338.6. And then so on, okay? When we lose a support level, that's when you get bearish. IWM. All right, nice bounce off. That's some nice buying pressure. That's a nice green body candle. Not seeing much selling pressure on that candle, okay? Right off of the yellow trend line of this triangle. All right? Still managed to hold. And it's testing the 201, what is that? 201.3 resistant level. If that clears, let me see if we got a moving average to do. Okay, that's at the 50-day moving average. That if that clears 201.3, that will put 203 in play. And that'll put 204. Okay, so 203 to 204 zone based on the 20-day moving average. And above that, we'll put 209.7 in play, okay? I will switch over to being bearish if 198 support fails for the IWM. Now, check this out. This is Apple. Check this out. Look at this crazy move to the upside, right? People will complain that we need a pullback. Well, we got the pullback, okay? You got what you wish for. And on April 11th, we had a false breakout scenario, okay? You see from this blue trend line, that's this blue bull flag. Starting from January high to February high, we got the breakout back in, mid-March. So April 11th looking like we had a false breakout, but yesterday we recaptured that level. Wasn't really a red day, but green day, excuse me. But we recaptured that bull flag nonetheless. And today, Apple showed some follow through, cleared the 38.2 retracement level at 168.4, and closed a little above the 170 resistant level. Okay, so we need to see follow through. If 170 continues to hold or clears, 172.76 is in play. That's a 23.6 retracement level. And above that is 178 resistant, 175, excuse me, 175.7. And that will be the resistance of this white flag right here, or white trend line, whatever you want to call it. All right. And if that breaks, that's a breakout. Very bullish. Got some resistance at 177 and 179.7. But if those levels clear, back to all-time high around 182, 183 zone. Okay, guys, I would be bearish if we lose the 168.44 level first. Tesla, nice move for Tesla. Got a low of 973, $1 off of my 972 support level. Not cool, Tesla. Need to be more accurate. But anyways, I can't control the price action, guys. So it sucks when it doesn't. My levels aren't accurate like I would like for it to be. But nonetheless, made a very strong move to the upside. But look where it stopped. No coincidence. It rejected. It got a high of 1,026. So it got rejected around the 20-day moving average, which is at 1,025.7. Okay. The point is it didn't close above it. All right. It failed to capture it. So that the 20-day moving average will continue to be a critical level. resistant level for the Tesla. So tomorrow, if you see it clearing the 20-day moving average, that puts 1,036 back in play. Then I got a level at 1,060. All right, that's a 13-day moving average. Okay, 1,061, and if that clears, 1126 is back in play. Okay, if you want to be bearish on Tesla, there is some support at 1,013.6. That's the 5-day moving average, so it could change by tomorrow. If you see we losing that level, 972 is back in play, and we'll see if it actually hit my support level. And if that level fails, nice big drop down to 906, 909ish, around that level. Okay, guys? And Bitcoin lost that 50-day moving average. Look at that. Lost it on April 11th, so it's in backtest mode. I don't trust it. Don't get too bullish on it. 50-day moving average is currently at 42K. All right? So if Bitcoin go and test that level and then rejects, like I'm thinking it will, but I could be wrong. I'm not a big fan of Bitcoin, guys. But watch that 50-day moving average at 42K. If it clears bullish, it'll put 43.7K back in play, resistant of the yellow triangle, and above would be a breakout. Okay? Rejection there is bearish, obviously, with 36.8K, 36.8K, yep, in play. All right? And below that is a breakdown, 28.7K incoming if that happens. All right, guys? So as you can see, you know, level to level trading works. Is it 100%? No. But it works more often than not. It doesn't. At least that's my opinion. And that's what I try to do with evidence every single day with my YouTube videos. And I just hope you guys found some value in this. And I hope you guys had a green day. Whether you're, you know, a bear or a bull, I wish no ill will on anybody. And the reason for that is because family is important, and Uncle Charles loves you. See you all later.